Hello everybody, our team chose Mongolia for our country report. In our team we have Inkalion, Takeshi, Arash, and Sherwin. So here's our agenda for our PowerPoint presentation. Sherwin will cover background and major sources of influence on accounting for Mongolia. Arash will cover unique features in the accounting profession. Takeshi will cover key accounting standards and practices. And Inkalion will cover IFRS issues and problems.
A land of physical extremes and natural beauty, Mongolia has historically supported a widely dispersed and mobile population with strong nomadic traditions. Endowed with an area of about 1.6 million square kilometers, which is larger than the surface area of France, Italy, and Spain combined, and a population of about 3 million, Mongolia is the least densely populated country in the world. It is landlocked in the heart of Asia between Russia and China. The country adopted a new constitution in 1992 that embraces principles of democracy and private ownership. The country has become one of the most open economies in the region, setting free government administrative traded prices, exchange rates, and interest rates, as well as establishing a two-tier banking system and opening doors for private initiative. Since the beginning of economic transformation in 1991, Mongolia achieved remarkable success in transition toward market economy and has made significant strides in achieving macroeconomic stability and structural reforms. Economic activity in Mongolia has traditionally been based on herding and agriculture, although development of extensive mineral deposits of copper, coal, tin, and gold has emerged as a driver of industrial production. Besides mining and agriculture, dominant industry in composition of GDP are wholesale and retail trade and service, transportation and storage, and real estate activities. Livestock herds increased from 25 to 40 million head, and there was a large increase in revenue from the mining sector as well. The annual average inflation rate was 9%, which was 3.9% higher than the annual average. Gross domestic product per capita was $1,478, having almost tripled since 1995, when it was only $528. Mongolia ranks 9 out of 62 countries for which firm-level survey data was available, and in terms of the percent of firms that believe corruption was their main obstacle. The World Bank Investment Climate Survey results suggest that the prevailing perceptions of corruption in Mongolia's public sector may be a symptom of rising inequality and partly stemming from perceptions of lack of transparency and accountability in policy decision-making and public sector governance. Corruption, which has based its roots in a lack of transparency and accountability, is a severe impediment that is infiltrated into various sectors of Mongolia economy. Despite embarking on several reform measures, the financial sector of Mongolia still remains vulnerable. The Bank of Mongolia, BOM, is responsible for implementing the government's monetary and exchange rate policies, maintaining banking system stability, and supervising the activity of the banks and similar financial institutions. Currently, there are 16 domestic commercial banks operating in Mongolia. Bank lending in Mongolia is almost exclusively collateral-based, and immovable assets are the predominant form of collateral. The stringent collateral requirements are a direct indication that the bankers perceive lending to be risky. The banking system in Mongolia is highly concentrated, resulting in low-level financial intermediation. In addition to banks, there are 137 non-banking financial institutions, NBFI, and 517 saving and credit cooperatives in the indirect financial sectors, saturating the small financial market. The weaknesses in the legal and administrative framework for bankruptcy and debt recovery make even collateral-based lending risky and costly. Poor governance and lack of adequate accountability make it difficult for banks to assess credit worthiness, forcing them to rely almost entirely on collateralized lending. Mongolia was never listed among the emerging market countries until February 2011, when Citigroup analysis determined Mongolia to be one of the global growth generator countries, which is being countries with the most promising growth prospects for 2010 through 2015. The Mongolia Stock Exchange, MSE, established in 1991 in Ulaanbaatar, is among the world's smallest stock exchanges by market capitalization. In 2011, 336 companies were registered in MSE, out of which 21 were 100% state-owned, 39 were partially state-owned, and 301 were private. The securities law governs the activity of stock exchange, regulates who may issue securities, outlines how public offering may be made, and sets down the duties and power of such capital market players as clearinghouse, depository organization, and underwriters. The Financial Regulatory Commission, FRC, was established in 2005 to administer the security law and generally to oversee MSE activities. A growing number of private enterprises, including corporations, have had a significant economic impact in Mongolia. Private interests dominate most key productive sectors, with the notable exception of infrastructure. An institutional framework based on the rule of law and policy liberalizing trade, promoting competition, and encouraging foreign direct investment has supported the private sectors. Most basic laws and institutions necessary in a market economy are in place. Privatization in Mongolia has been more rapid than in many other former centrally planned economies, yet private sector development faces significant limitations. Weak legal definitions and a lack of harmonizations are compounded by the absence of a reliable judiciary and limited familiarity with court adjudications. An inadequate supply of skilled managers, finance professionals, and technologists, and limited technological development lowers productivity and affects the comparativity of advantage of many enterprises. Capital market, insurance, and leasing operations do not yet play a meaningful role in the economy, and access to capital is limited, particularly for small enterprises.
The accountancy profession is regulated by the law on auditing that gives the governing authority to the Mongolian Institute of Certified Public Accountant. MICPA is a non-governmental statutory organization established in March 1996. The law on auditing mandates MICPA to administer the professional accounting examinations, approve and enforce the Code of Professional Conduct and Ethics, provide certified public accountants exam preparation courses, conduct continuing CPA professional education training, and provide audit firms with methodology, consultancy, and information. Only audit firms that obtain the audit license from MOF are authorized to act as statutory auditors. To date, there are a total of 1718 CPAs in Mongolia, 355 CPAs holding lifetime certificates because they pass all three levels of examinations. To become an auditor, the CPA should hold a 5-year certificate and then join a MOF licensed audit firm. Regulated by the law on auditing, the MOF issued CPA certification is based on MICPA recommendations. There are two kinds of qualifications required for individuals who are allowed to take the CPA examination. Number one, individuals who possess a bachelor's degree in accountancy or equivalent degree with at least 2 years working experience. Number two, individuals who do not meet the above requirements but complete their required accounting credits including training programs of universities, and have worked as an accountant for more than 4 years. The CPA program in Mongolia takes at least 7 years to complete 3 stages of examination. Once a person completes stage 1 and fulfills the working experience requirement, the person is allowed to be called a CPA and join the MICPA. 2 years later, with additional training given by MICPA, stage 1 CPAs may take the stage 2 examinations. 5 years after successfully passing stage 2 examinations, CPAs take additional training given by MICPA and are eligible to take the stage 3 examinations. There are weaknesses related to the CPA examination and the prerequisite requirements. The CPA examination doesn't extensively cover some critical subjects such as advanced auditing and corporate reporting. The CPA examination also is not computerized. Consequently, exam candidates have difficulty accessing past examinations, which are treated as a confidential and essentially unavailable in order to prepare for their examination. Besides MICPA, there are other professional organizations of accountants in Mongolia. The Mongolian Institute of Internal Auditors, Mongolian Institute of Management Accountants, and Association of Mongolian Auditors are at an early stage of development due to lack of legal framework, governance and institutional arrangement, and technical capabilities. The size of accounting and auditing profession is currently small compared to the number of enterprises whose financial statements are subject to statutory audit requirements. Mongolia has around 10,400 accountants working in over 50,000 enterprises and government entities. Also, there are 51 audit firms operating in Mongolia. Most banks and large foreign investing entities are audited by the 2 international audit firm network members. Many local audit firms are relatively small, and their audit services are mostly engaged in assisting their clients to prepare tax purpose financial statement. Auditor quality is lacking oversight. The law on auditing gives the Ministry of Finance responsibility for oversight of the auditing profession. The MOF currently conducts very limited auditor quality reviews. The actions undertaken by MOF with regards to issuance and revoking of licenses fall short of what is considered good practice. Many audit firms are misrepresenting their number of qualified auditors. Some small audit firms do not have an adequate qualified staff to conduct all their audits. Consequently, audits are sometimes being carried out by assistant auditors who do not have the necessary training and experience. There are also cases where audit firms are using the names of people who are not part of the firm or may be residing outside of Mongolia. As a result of poor professional performance, the public and potential investors lack confidence in auditors' reporting. Mongolian auditors lack the necessary knowledge and experience to properly apply ISA. The auditing profession needs to boost its credibility and professional competence. Due to lack of resources and capacity, most audit firms do not have mentoring programs for new staff. Some audit firms provide limited internal training for their auditors. Most audit firms do not have sustainable and well-educated internal trainers for providing continuing education training due to lack of capacity and financial resources. Most universities and colleges develop their own accounting and auditing curriculum. There are 47 universities comprising 11 state and 36 private accounting and economic universities colleges. Only 10 of these universities are members of the Consortium of Economic Schools, CES, a non-governmental organization. Accreditation for either the organization or the program are given to higher education institutions by the National Accreditation Council for Higher Education. The organization accreditation review mainly focuses on the organization's resource capacity and management capability to provide academic education, while the program accreditation reviews the subject and the related curriculum. Students studying accounting and auditing in Mongolia universities do not receive sufficient training in IFRS and ISA. There are weaknesses in university accounting curricula, especially as it relates to international accounting and auditing standards. Accounting curricula do not sufficiently cover auditing, ethics, IFRS, and ISA, and any related updates. Only 3 universities teach IFRS and ISA as a separate course. In addition, most accountants cannot obtain sufficient continuing professional education after graduation from university, as no institution offers such training. Universities lack the resources found in good textbooks and instructors. Professors translate foreign accounting and auditing textbooks into Mongolian text, but what few textbooks are available are out of date, and many professors lack the English or other foreign language skills to translate effectively the text into Mongolian. There is no oversight on the quality of the numerous short-term accounting courses being offered to the public. Some private enterprises offer short-term, mainly 45 days to 3 months, training courses on accounting and issue certificates to their graduates. There is no legally backed institutional arrangement to monitor these activities. The key stakeholders in the country are of the view that poor quality courses are being offered by many of these training centers.
Now, we're going to talk about Mongolian accounting and auditing standards. Mongolia adopted IFRS in 1993, and currently all public, private, and foreign companies are required to prepare their financial statements in accordance with IFRS. It may seem like IFRS is a single set of accounting standards in Mongolia, like GAAP in US. However, private companies are also allowed to prepare the financial statements in accordance with Mongolian accounting standards. Therefore, there are 2 accounting standards in Mongolia. Consequently, most of companies use Mongolian accounting standards because 95% to 99% of Mongolian business entities are private companies. Then, what are Mongolian accounting standards like? How are they different from US GAAP? To answer these questions, it is necessary to understand its accounting history first. Mongolia did not have accounting standards until the end of the 1980s. Because the Soviet Union ruled Mongolia and its first accounting standard was developed by Soviet Union. After Mongolia left from the Soviet Union, Mongolia developed its own accounting standards based on the Soviet accounting system. Since the Soviet Union accounting system used many concepts of modern accounting, including accrual measurement and double-entry bookkeeping, there are no significant differences between Mongolian accounting standards and GAAP. However, because of its short history of accounting standards, it still needs further development. In fact, its accounting standards are less prescriptive and rely on the individual's own professional judgment. A unique fact about Mongolian accounting standards is the fiscal year end for all enterprise must be December 31st. Now we prepared some examples to illustrate how Mongolian accounting standards are different from US GAAP. These are just the main differences, and there are more differences between the 2 accounting standards. First, Mongolian accounting standards allow single-entry bookkeeping. This is because business transactions in Mongolia are generally recorded based on a cash basis. Moreover, inventory and depreciation are calculated with only one method, whereas US GAAP allows several accounting methods. The important difference between GAAP and the Mongolian accounting standard is that Mongolian accounting standards are principle-based. On the other hand, US GAAP is a rule-based. Therefore, the standards do not provide detailed information for specific transactions, such as discontinued operation and impairment loss. The next topic is Mongolian auditing standards. In Mongolia, public, private, foreign corporations, small and mid-sized enterprises, state-owned enterprises, and other entities need to prepare financial statements in full compliance with IFRS. The due date is February 10 for all companies, and any extension is disallowed. Currently, Mongolian auditing standards do not have strong power of enforcement and therefore do not function effectively. In fact, public accounting firms audit only 80% of the 440 businesses listed on the stock exchange. Therefore, current Mongolian auditing standards also need further development. Then what kind of issues do Mongolian auditing practice currently face? First, less enforcement of auditing law. In Mongolia, the consolidated financial statements must be prepared in accordance with IFRS. But consolidated companies do not follow this rule because there are no sanctions from the relevant authorities. The second issue is unnecessary auditing. The threshold is $42,550, which is seemingly low for the marketplace, and it results in unnecessary audits being conducted for small companies. The third issue is the tight schedule for auditing companies. The auditing firms must complete their audit within 40 days for all clients. This tight schedule causes errors and incomplete audits. The fourth issue is less independence for auditing firms. Some audit firms provide non-auditing service such as consulting, accounting, due diligence, or tax preparation to their clients. Since there is no regulation, auditing firms are not restricted from providing non-auditing services to their audit clients. The fifth issue is its inefficient auditing practice. After an audit firm has been an auditor of a company for 3 continuous years, the firm cannot audit the company in the following 3 years. This requirement does not seem reasonable when the additional cost to the company is considered.
IAS and IFRS were required in Mongolia since 2002 and were adopted as part of the amended accounting law and law on auditing. Although the 2003 version of IAS, IFRS, and International Public Sector Accounting Standards were translated into Mongolian language, it didn't include the glossary, interpretations, and other ISP-required items. The Ministry of Finance, particularly the Accounting Policy Department, is responsible for organizing translation of IFRS into Mongolian language and is also responsible for development of IFRS-based national accounting standards and guidelines. However, the ministry doesn't have sufficient staff or budget for either task. This creates a time gap between translation and adoption of newly issued and revised international standards, which hinders continuing development. Due to lack of resources and skilled trainers, the Ministry of Finance introduced translated IFRS to the public through short-term seminars. However, these seminars weren't in-depth and sufficient for accountants to fully understand IFRS application. The ministry hasn't taken any significant action to educate the business community and introduce them the benefits of adopting IFRS. Because of that, the IFRS-based financial accounting and reporting is not highly valued or appreciated in the business community. As mentioned before, the biggest issue is that regulations aren't timely updated. in line with change made in IFRS. As of March 3, 2015, translation of the 2011 IFRS Red Book was still in progress. All entities are required to adopt and utilize IFRS, but actual implementation does not exist. World Bank report and analysis show that quality of financial statements prepared by majority of enterprises in practice fall far short of IFRS. Accounting for certain items do not fully account in accordance with IFRS. For example, deferred tax is a new concept in Mongolia. It's not well understood and does not apply in preparation of financial statements. Companies do not track or disclose related party transactions. Only audit firms associated with international accounting firm networks generally tend to follow international standards on auditing, but others find it costly to comply. Most auditors lack technical expertise in applying and enforcing IFRS compliance. University curriculums aren't oriented toward practical application of the ISA, and because continuing education is not effectively provided, auditors and accountants face difficulty in understanding and applying standards. Also, audit services provided by firms consist of primarily converting the client's statements into IFRS formats. They are not acting as independent auditors. Most entities view auditing as certification that the entity has complied with the laws. They expect auditors to correct their presentation of financial statement for legal compliance. So they are seeing auditors as their external bookkeepers. And most auditors do not conduct audits in accordance with ISA. The accounting law states that all entities should file financial reports in accordance with IFRS to the Ministry of Finance, but the Ministry uses them primarily for statistical analysis, and they are not made available to public. The Ministry accounting specialists are responsible for reviewing reports from their respective districts. However, they don't have time, personnel, or technical expertise to determine whether those enterprises are following IFRS. The examinations are limited to checking mathematical accuracy, completeness of document components for filing, and other areas without any real technical review for IFRS compliance. Plus, there are no sanctions on listed companies or against auditors for not following IFRS. The Ministry of Finance stated that in Mongolia there are approximately 70,000 entities, of which between about 95 to 99% are small or medium-sized entities. Hence, adopting the IFRS for SMEs is an important issue in the country. Most SMEs in Mongolia prepare their financial statements under the accounting regulation, which was approved by the Ministry of Finance instead of IFRS. The IFRS for SMEs has not been adopted in Mongolia because the ministry is working on amendments to accounting law that will include classification of entities. The ministry states that once the classification is established, they will legislate the adoption of the IFRS for SMEs. There are many policy recommendations from the World Bank, and it could be challenging for Mongolia. Those recommendations fall into four main areas. The first one, statutory and legal framework. This includes setting up an appropriate framework, outlining effective monitoring, placing greater emphasis on financial reporting. For example, auditing and non-auditing services should be separately defined in the law in accordance with ISA. In particular, the legislation should prohibit auditors' involvement in preparing financial statements for clients. Second, standard settings and enforcement. High-quality reporting depends on designing and implementing a proper monitoring and enforcement system. There are some crucial aspects in the monitoring and enforcement process, and each must be strengthened. For example, the supervisory agency should increase its human resources by employing more staff who are familiar with IFRS. Also, ongoing practical training on implementation of IFRS and ISA should be provided to staff. Third, development of the accounting and auditing profession. This includes many necessary points to be strengthened, such as issuing practical application guidance on IFRS and ISA. The MICPA should ensure that all standards, interpretation, and implementation guidance are promptly available to its members. And fourth, professional education and training. Mongolia should establish a mechanism to educate accountants and auditors to improve practical application on modern accounting and auditing. The core concepts such as accrual basis, the separation of tax and financial reporting, interaction of financial statements, and management accounting should be central to professional education. Our presentation ends here. Thank you for watching. We hope you learned something interesting and new from our report on Mongolia.